Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday and another day in the life of the market. A day of little selling and a day of quick feed and quick decisions. And what it leads to, we're not sure yet, but you have to act based on your time frame. So with that being said, I know today, after yesterday's action, I came in with like 6-7 longs and a hedge, and I felt as if I had to be long and have some exposure. Things look pretty good. I know we've been in a range, it's been tight, the action's been lethargic, it's been apathetic, everyone's been complaining, but at some point something had to give, and you look at the chart, and as of yesterday, you look at the S&P, looked kind of good. You had some key stocks making some decent moves, and it looked as if we could head back towards highs where this ascending channel remained in place. And then what happened today? Boom! Out of a cannon. Anyway, so here it is. This is what today is. What does this mean? At this point, all you know is that this one day engulfed this entire range. I know when this happened, I remember going home short. I was very short, and that happened. There was absolutely no follow-through. This day looked as if we were ready to break below. Nothing happened. So now the question is, will this lead to some type of corrective phase? Will this day bring forth some fear, some sellers? Would it, with a close below the 50-day, will it bring out a move back to 2083? Will it bring out a move even lower? I guess in order for that to take place, it can't reclaim it. It can't reclaim this 2099. It can't reclaim this in one day and engulf it. And we have a big jobs number tomorrow. So they always make the market as hard as possible to have positions. Lately, one day down, if you're a buyer of it, you get paid. For me, every one day down, if I reduce all my risk, the next day we're gapped up 10 points in the S&P, and I'm like, wow, I did the smart thing. I reduce risk because you never know when it's going to be multiple days. But that's what I do. I reduce risk when we break key levels. You go back to the chart. As of right now, what do you know? The S&P is below the 8 and 21 day, right there. It's below the 50 day, all in one bar. Okay, was there any real volume today? Let's go to the spiders. I don't think there was a heck of a lot of spiders. Yeah, actually some decent volume there. So with that being said, this would be a day in front of a big jobs number to take caution. So, I actually am short the spiders because, rallied up after hours. I think right now it's trading 210.30, so I'm going to short a little bit just because if there wasn't a big jobs number tomorrow, okay, and I know everyone says Red Dog hates being short, which I do. It's a very uncomfortable thing for me. This would tell me to be a little bit short, okay, because perhaps moving averages curling down, not riding them to the upside, but curling down typically leads to more, lower action. So anyway, you came in today, futures are down 10, 12 handles. What do you do? Hopefully you had stocks that were strong that people went after. They give you a way out of it. So by 10:30, I was pretty much out of all my positions and pretty flat on the day, P&L wise. I was pretty happy with myself. I had 6 longs, some of the biggest high beta names out there, and with the Dow down almost 200 points at 3:30. I was flat on the day versus, having a horrendous day, and that's what you have to do as a trader. You have to manage your positions. One of my positions was Facebook. So for me, okay, I said this was your time to be long. Then you had this move, and then it broke above, and I figured maybe we'd get a negative to positive move, push above 82.53, but if it doesn't hold that, I'm out. Okay, so anyway, it pushed above 82.53. Made a high of 82.95, so it gave you a way out after a 3-day move. Okay, and basically had a doji, and let's see if it could flag up here. This is in the stronger camp. This is something that probably looks better than most other things. What would have been unfortunate is if it opened down 40 cents and closed down $1.50 and trapped everybody here. It didn't do that. It gave you a way out, and actually if you were flat in your active account, knowing that it closed like this, okay, yesterday, this would be something you go after. You go to the 5-minute chart to see, it opened lower, gave you a quick move, push to highs, and then right here, it got a little wishy-washy. That should have been your out somewhat. So anyway, it did give you a cash flow trade in the first 30 minutes, but if you're prudent, you know that 1, 2, 3 on the fourth day, you're not paying up. Twitter, same type of thing. Okay, LinkedIn, day 4. Some guys actually made a little bit more money shorting it today because, it put in a little bit of a red dog reversal. Okay, pushed through this prior high. You could have shorted it here at 215.46 versus the high of 217, $1.50, and then it closed at 212. You could have made a few bucks there, $3. Here is when you get long on a day 1, open lower, day 2, pushes up. Now you'll see if this gap holds. Okay, if it can go sideways, maybe there's another trade, but when you get a 4-day move, you're not paying up here. It's hard to be short, but at least on this type of strategy with the RDR, it's calculated. BABA today gave us a good morning long, and it too, people are like, what do you think of BABA? I'm like, it held in pretty well compared to the market. Gave you a little bit of a doji. Last time I gave you a doji, gave you another whipsaw day. Here's now your new resistance. Here's your support. Still acts okay above the 21-day. Still has, the gap in place from earnings, which was right here. It still broke that downtrend from all the way over there, which I'm not going to get up there. Gave you a good trade. Gave you that red dog reversal right there to sell it, right? Why not? From 87, you add above 89. You hold it however long you can. Reversal there. And then boom, and now it's going sideways. So if it were to get above this 91.50, maybe it continues. If all of a sudden this is a lower pivot and it turns down, you could use this as a stop. So that's what I would talk about with BABA. Another stock I came in with was Amazon. Amazon is my nemesis. What was that movie? Whatever it was, Nemesis. I don't know if Amazon's your nemesis, but it's mine. Yesterday made good money in Amazon. I took it home long. It was down $2.50. I gave it time. I'm like, I'm going to give this time. I'm not just going to hit it out. I'm going to give it 30 to 60 minutes. And if it breaks the 60-minute low, I'm out. You look at Amazon now, and that was what I was talking about. Here is that low. The low was 432.75. Okay, broke out. This bar looks a little bit more powerful than this bar, also below the 8-day, and Amazon is tough. So the way I dealt with it was right here. Okay, just so you know. Okay, this was yesterday, this is today. Okay, it tried a few times to come back and go positive. Where are we today? Here's today. Okay, so with that being said, this was the prior day's low, 433. Here was your gap down. Okay, actually this was the gap down, and then it pushed up. Into that I sold half, and then I said when it breaks 434, I'm out. So that was the morning low. So breaking 434, I would be out. Okay, it broke 434 around, what bar was this? This was a 1010. You saw it leave the VTF. I tried. I tried again. Here was your upper flag, and boom, got out here. And you know what? It saved me $2 or maybe more. Actually, how far did it go down? It closed at 430.83. So it saved me $3, and now I'll figure out tomorrow what to potentially do. Amazon is very tough. I guess this is your 2 days, and we'll see what happens tomorrow. It's still above the 21-day, which it's been riding. It's still above the earnings gap, but for cash flow basis, you had to trade it based on your time parameters. Also at Google overnight. And Google, I wound up having to sell. Okay, Google, same type of thing. It was down $5 pre-market, which wasn't fun. And then I actually, with this one, I managed it a little bit better. I sold it when it went positive. Okay, I just didn't really trust it. It opened down, went positive on this little bar around 554. I sold it. It couldn't get above the prior high, and I was like, you know what? I'm out of this. I'm going to revisit it. I don't like the way the market looks. Got out of it around 554. And I guess I saved myself some money here too. It closed where? 551.73. So, $2.50, whatever. A lot of these things, got ticked up at the end of the day. It's still not done, but this is a sloppy mess. My chart here is a sloppy mess. A lot of stuff from the morning call, but doji here, wait, I guess. And then what I also had was Morgan Stanley, a bank. So if you see what I came in with, lots of reasons. Google, maybe it can go. Shareholder meeting makes sense. Didn't happen. Amazon broke out. stick with it. Perhaps it was momentum. Didn't happen. Facebook, 3 updays, strong volume yesterday. Maybe you get follow through. It had a little bit of a push, ran for the hills, didn't add. I said I'm lucky to get out of it. And then you had Morgan Stanley. So Morgan Stanley, I guess still looks okay, but after this choppy trend all the way to the upside, broke out yesterday, went positive, and then once it went positive, I sold a little bit, and then once it went back negative, I was like, I'm done with it. So the close here was 39.01. You look at the 5-minute chart. You had this quick move up because everyone was used to buying the banks, right? Very used to it. So I figured, let me salvage some trades because I feel like the market is not going to run away on me. So I think I sold some, I sold some here, sold some there, and then once it broke this area, I was like, you know what, I'm done with this. I'll revisit it because it could be a reversal, and right here was that spot, and it wound up going a lot lower, and we'll see what happens tomorrow. Okay, Goldman Sachs also, has had a long run. Still looks okay. Still hugging the 8-day. A lot of these things still look okay actually, but J.P. Morgan just a little choppier after a big move, and then Apple. Apple, my friends, has not been fun. Apple, you know what? I'm going to play. This is the song that I'll play for everyone wanted a song today. So, every now and then, Apple has momentum, and Apple gets going, and you could buy it and buy more, and you could sell it up, and every now and then it doesn't. So when Apple's in play, you could be happy. When the market has momentum, you could buy high and sell higher. When the market acts well from a bullish standpoint, you could actually hold 7, 8, 9 positions and use a tier system, take some home, buy some over a prior high, sell some into new highs, manage the position, and recently that's been very hard to do. In a downtrend where you break below a level, hold below a level, you could also get short, and then hopefully you start a new down move versus break below a level, come back a level, and get stopped out. And that's why there's been a lot of frustration in this upper range. So, me, who everyone says is a perma bull, which I am not. I'm a perma trend trader. I'm a perma technician. I'm a perma process participator that tries to, maneuver the markets like everyone else. When there's some clarity, you could sink your teeth into it. So anyway, Apple, which I've been trying to be long, which typically makes me happy because I love the company, I love the product, but the chart has been a little lethargic. It hasn't been a leader, and when that's the case, I try and stay away. Look at the chart of Apple, and again, it doesn't look drastic. It doesn't look like game over, but you have this downtrend here that you couldn't get above, and now it closed below the 8 and the 21-day, which is something that, as a momentum trader, you have to reduce a little bit. Yesterday when the market was strong, it was weak. Okay, today it gave you a quick little move, and I actually made some money in that one, and then when it went negative, I got out. And it seems like if the market wants to be a little weak, there's no reason why, Apple can't retest this prior breakout area, which was 127.60, and that comes in here. So this is not giving you any real reason as a cash flow active trader to be long it. You now have a new descending channel here, kind of like this one, and until it breaks above it, which has been lowered, it's just a choppy mess. If you've been in it for multiple years and you've built wealth on it, congratulations. It's given you a lot of wealth and a lot of happiness. Okay, up here, shouldn't matter to you that much. But as an active trader for cash flow and P&L, there's really nothing so awesome about this right now, except for it's building a descending channel that could take you as far as it wants to go until it doesn't. So Apple right now is really not making the longs happy, or the market. Then you even have something like Intel. Intel, I thought about looking at it for a scalp today, and Intel, reversed here, didn't touch it, broke the 8 and 21-day, that's your out, and now it's below the 200-day. That's not great for the semis, guys. But the rule. Sometimes it breaks below, comes back above, and traps the people who didn't sell here, here, and here, and sold there, and then it starts again. So, we'll watch and monitor Intel. If Intel can't really bounce off this and reclaim, the 200-day relatively quickly, That's probably not a good sign for tech, where if you look at the Qs, I drew this line this morning. It kind of, besides this being a sloppy mess, it broke below the 21-day. It's a little bit off the lows, but bending a little bit. You could test here and be fine. It could test there and be fine. And right now, it's a little bit of no man's land. So you got to be careful. What did the Russell do today? Did not hold this little breakout here. Didn't fall apart, but another choppy day. So what is the deal? The deal is that we've been trapped in this range, and there are a lot of hesitant buyers, right? We're in the 6th year of a bull run where a lot of people have made a lot of money long. There's also been a lot of people that in the last 2-3 years said it's going to end and they didn't get in it, and they don't want to buy now because they feel like they're holding the bag. Okay, same way, a lot of guys who said this market can't go higher anymore, that went all in once, all in twice, all in 3 times, all in 4 times, maybe they were just trading in, because if you go all in once and you blow up, chances are you have no more chips. But there are a lot of guys out there that don't trade real money and don't have the psychological, brain power in the game. It's very easy to paper trade out there. I have a lot of guys that started 6 months ago that traded a lot more on a simulator and make money versus real money. But anyway, if you've been short this market for 2 years, you've probably been blown up already, and the last thing you want to do is get caught short again. So when you're up in this tight range where you're not breaking down, but you're not breaking out, and every time we move lower, it looks like we're going to correct, or every time we look like we're going up, we're going to break out, it's been a very hard environment to find follow-through. As a trader, we look for follow-through. Follow-through is what pays the bills. Follow-through is what makes us happy, and there's been a lack of it. So to be honest, I'd rather see a little bit of a corrective phase and some volatility pick up and change the dynamics of the trade, because lately there's been things to do, but it's been a lot harder to sink your teeth into things and trust them. Maybe at some point that'll change. Usually over the summer it doesn't. So the best things to happen over the summer too are corrective phases, because at least there's movement, volatility, things to trade from a long and a short side, and attention. Because if we stay in this monotonous spot and the summer happens and people go away and the volume decreases even more, chances are there'll be a lot less opportunities. So anyway, the jobs report's tomorrow. I still think that the Fed is going to move in September. I'm not sure how the market wants to react, but I guess a hot report, meaning over, I think the range is like 170 to 220. Anything over 220, I feel like you'll have the TLTs make another move lower. You'll have rates go up. You'll have potentially the market get scared and maybe go down, and that'll be the knee-jerk reaction, and then we'll figure out what's next. If it's a very light report, they're going to be like, we've just threw trillions and trillions of dollars, and the market, it's not really working. What do we do now? So that could also, maybe you have an up and then it starts to fail because they'll say, oh, the Fed's not going to raise rates, in the summer or September, but the market wants that to happen already. If it's in line, probably be a little bit of a choppy mess, and we'll just have to figure it out. But anyway, I'll be in short hills tomorrow. I'll be on the radio. I got cleaned out of my positions today, and I actually shorted a little spiders after hours. We'll see how it goes. See how Europe behaves. It's definitely been a little bit of a headwind lately, and I actually think that China and Japan are an accident waiting to happen. 2013, 2014, I talked about accumulating both for major breakouts. Those breakouts happened, and they've gone somewhat parabolic, all based on the PBOC and stimulus. And at some point, with the violence in the ranges that I'm seeing, from experience, that doesn't typically end so well. So with all that said, low gross, low net, take your trades, keep moving on, and put yourself in a position to enjoy the summer. Summers are fun. Friends, family, fitness. See you tomorrow.